Hello everyone, good afternoon. This is Mohsina. I'm partner of BSA. Welcome to our today's session, exempt and out of scope person as per UAE Corporate Law. So our session will be conducted by our distinguished speaker Saba. So I will hand over to Saba to start the session.
Hello everyone, can you guys hear me well?
Yes.
Okay, let me just share my screen. So without further delaying, as you know, last time was the first Ramadan session and we realized that it was very short of time. We're gonna jump into where we were. So these are the topics for today. We're gonna discuss permanent establishment, nexus in the UAE, and tax registration. I'm sorry for the confusion about the topics which we circulated earlier. Slight error on our part, but we left at permanent establishment. For whoever has joined me in the last session, we're going to continue and close the PE topic, and we're going to talk about nexus and tax registration today. Few of the of course, all of the decisions which are relevant to the topic today are I'm going to cover them. So there's a there are few ministerial decisions, there's a cabinet decision, and there's a reference of a tax guide which will have a impact on our discussion today. Coming back to the diagram which we are seeing from our first session, we are still on the taxable person. We discussed exempt person in our second session, remember, and in the third session we started from out of scope. We are back again on taxable person, and we are talking about how a non-resident can be a taxable person. Yeah. So going back again to the basic slide, resident and non-resident person. A non-resident person can be taxable for UAE corporate tax if it can have a permanent establishment. It could be deriving a state source income, or it could have a nexus in the UAE. So we covered state source income because it was a short topic first in our previous session, the third session, and we were on permanent establishment in midway somewhere to the end. And today we then have to talk about nexus as well. So I'm gonna brief everyone because we are discussing permanent establishment again. So I'm going to start from the start, but I'm going to be quick today. So a permanent establishment, which is covered through Article 14 of the law, it could be a fixed or a permanent place where a non-resident could be conducting a business from in the UAE. And we are only talking from the UAE corporate tax perspective. So we are talking about a non-resident who could have a presence in the UAE in the state. Or a non-resident, point B, a non-resident who could have a person who could be habitually exercising and conducting business or business activity for the non-resident in the UAE, or a non-resident could have a nexus in the UAE. So that any one of three situations can cause a permanent establishment in the UAE for a non-resident. Then the law gave some kind of examples. It's a list of possibilities of permanent establishment. We have discussed it. Important point here is that if you have a building, construction site, or place of assembly in the UAE, then you create a permanent establishment if you spend last 6 months or more, or if the non-resident have a double tax treaty with the UAE and the treaty says it's going to only meet the condition of permanent establishment after more than 6 months. So let's say the treaty says 9 months, for example. So 6 months condition will not apply. The non-resident will get a benefit of the double tax treaty, and it can have an extended period of being non-taxable in the UAE. So instead of 6 months, it can become 9 months or anything else. But in most of the treaties, it's 6 months. So in 6 months period of time, if you are still having a building or construction site in the state, in the UAE, then you would create a permanent establishment. Like for the others, there is no timeline defined, but only for point I, there's a timeline of 6 months or more time, which could create APE. Now, another important point here was that in a state source income, if a state source income also have a PE, then it comes together and the person becomes like a taxable person like any other person. Yeah. Then there were some exceptions to the law, that if you are just having a store, a display place, or just holding assets on behalf of somebody, or just here to collect information, or doing something preparatory or auxiliary in nature, or a combination of any of these, then you might not be conducting a business or a business activity, and you might not create a permanent establishment. And then there is an exception to an exception, that the somebody who is breaking their activities in a way that it looks like they're not creating a permanent establishment, so that will not be considered. So the law considers the anti-fragmentation rule. So you cannot split your work into different categories to show that none of them is creating permanent establishment. If a non-resident is conducting more than one activity, it's all gonna be looked at as in together. Substance over form will come in, and then it will be concluded, is it creating a permanent establishment or not, by looking at all the activities together. Then the second point where you can create a non-resident can create a permanent establishment is that they could have somebody in the UA which could be habitually exercising authority on behalf of the non-resident to conduct a business or a business activity. So what does that means? It means that either they are concluding contracts or deciding terms of the contracts or anything, but not subject to an approval of a non-resident. So that person like behaves as a representative, and his decision is binding on the non-resident. And then the concept of independent agent comes in the Article 14, and it says that if you're dealing with an independent agent in the UAE and they are just doing their ordinary course of business, for example, if you're a non-resident and you're dealing with a real estate agent, yeah, to buy a property, so they are acting on your behalf, but because they are just doing their job in an ordinary course of business, so that won't create your a non-resident's PE in the state just because you are dealing with an independent agent. But from here, we also get a hint about a dependent agent. So if you have sent somebody or if you have hired somebody, as in you means non-resident, who behaves as an agent for the non-resident, but it's totally dependent on the non-resident, so it will be considered as equal to a non-resident itself coming here and doing the business. And in that case, the non-resident will create a PE. Then there is a concept of natural person and the PE in the same article. And any of the above, like if you have a fixed place of business, place of activity, or somebody who is conducting a business on behalf of the non-resident, all of it can be conducted through a natural person, right? But then the law says that there is some scenario where a presence of a natural person in the UAE on behalf of a non-resident might not create a PE, and that will only be when the natural person is here temporarily and it's here for an exceptional situation, or it's stuck here for an exceptional situation. So we have all seen COVID, and people were stuck in different jurisdictions and they were doing their work from over there. It doesn't mean that they have started creating PE, and that person should be like employed by the non-resident, and then that person should not be generating in core in how we say core income generating activity, yeah, in the legal terms, but it should not be deriving business from here. It should not be having a state source income in the UAE, and in that case the natural person's presence will not create a PE. I will not go through this because we have discussed this in our previous session. Just was creating the momentum. These are just the guidelines given in the guide reference I have given in on the top, and it says that what kind of test a non-resident or a business can conduct to identify if it has a place of business in the UAE, although they might not be legally registered to do business here, but they might still be creating a permanent establishment. Then there are some considerations given on the right, which are also derived through the guide and just been summarized here for you. And then there's a reference of MD Ministerial Decision 83 of 2023, where the law further defines that what could be a temporary or exceptional situation where a non-resident might not create a PE. Yeah? So it's again a kind of reiteration of what's written in the law, that it could be a consequential or exceptional situation. And the person didn't expect it or predicted that they will stay in the state for this long, and they didn't intend to do that, or the non-resident who sent the person was not intending to create the PE, and it was just all consequential of some other situation. And then the same MD 83 further defines that what could be such one of such examples. So there could be a health measure which can make people stuck. There could be a travel restriction. There could be a war. So and on a personal level, there could be a health emergency or similar situations can create a person's presence in another country, but and from here just talking about UAE, but that might not create a PE for a non-resident if they're not, if I say simply, they are not conducting a business in the UAE, and or they didn't intend to, or if they don't have a PE. For example, if a non-resident already have a PE in a country, yeah, so then if there is a natural person who is coming on behalf of the non-resident, but which fits under all these conditions, then it will still be creating a PE because the PE was always there and the business was already being conducted here. So just having a non-resident to come and meet this condition might not save you from permanent establishment if you already meet the other conditions of permanent establishment. So it goes together. And then there is an article 15 of the law which specifically talks in reference to permanent establishment. So it's literally article 14 talks about permanent establishment and its conditions, and then article 15 just talks about one scenario, that an investment manager will not create a permanent establishment for any company or any person if they are just doing the business in their ordinary course of business. So let's say the conditions which are defined by the law are that they are doing the investment management business for like not only one person, they are doing it for everybody. They have a regulatory oversight. So most of you who would have a background about investment manager, you would know how they operate. So they have a regulator, yeah. And then they don't do the business only for one company, they do it for many other companies. And they have a way to conduct a business in an ordinary course of if you define it in the ordinary course. So they should be doing a certain kind of transaction as the law defines, and then they should not be only exclusive to a non-resident and not doing business for another people, because if they're exclusive to a non-resident, it means that the non-resident have kind of created them, yeah. And in that case they can create a PE. But if they are like any other investment managers and they are totally like a third party for a non-resident, then they will not create a PE for a non-resident just because the non-resident have an investment and they are investment managers for them. So this is all the article 15 talks about. Then the main topic which we have to cover today, so this was some of the leftovers from the permanent establishment, yeah, which we were discussing now. The main topic for today is the nexus and how you create a nexus in the UAE. So again, a reference to the law, Article 11, which we have discussed in previous session. It says that a non-resident can create PE, or it can have a state source income, or it can have a nexus. So this is where we are picking up the nexus topic. Now, nexus is, as also written in the law, a cabinet decision will further explain how somebody will create a nexus. So now we have a cabinet decision, which is cabinet decision number 56, and it defines what would create the nexus for somebody. So this cabinet decision says that a nexus will be created only by a juridical person. So a natural person will never have a nexus in the UAE, but a natural person can have a state source income. So it's still the same thing, but the terms are different. So a juridical person who is a non-resident for UAE corporate law and regulatory perspective can have a nexus in the UAE if they earn income from an immobile property which exists in the state, means which exists in the UAE. So what kind of property it could be? So the same cabinet decision further defines what immobile property means for this decision. So it's any area, any land, any building, any engineering work, any fixture equipment which is attached to the land, for example an ATM machine. So any of such things, or a seabed, if you have an oil and gas experience, you would know, or anything attached to the seabed, similar to how something attached to the land. So some similar things attached to seabed to perform extraction or related services or work. So any such immobile property, if there's a juridical person who's a non-resident and they earn income, so what kind of income they could earn? So they can be disposing such property, they could be providing a right to use to such property, they could be directly using that property itself, they would be letting it, subletting it, or they would be using it in any other form to create income. So if you know a non-resident in your group, for example, and they have a income being generated through a UAE property in any way, they are creating a nexus in the UAE. Now, unlike state source income, a non-resident who creates a nexus in the UAE is required to register for corporate tax. Okay, and I'll refer it to another clause of the law which will help you identify that how I am concluding this. So the second point from the guide, which I could take away, was that the nexus doesn't apply to natural person, and you can see it from the decision. And then if you create a nexus in the UAE, then you become as normal taxable person as a juridical person in the UAE. So until 375,000, you will be paying 0% tax. Above 375,000, you will pay 9% tax. And if you have a qualifying free zone activity and you fall under all the conditions, then you could be taking the benefit of free zone benefits also. Coming to, because we are short of time, that's why I'm running and not taking a lot of time to discuss it further. But if you guys have any questions, you can reach back to me. Coming to the tax registration, in my first or second session, I have said that any taxable person will be, if you're a taxable person for UAE corporate tax, you will be required to register, okay, for the UAE corporate tax. But over the period of time, we have seen that somebody who is only have a state source income and doesn't have a PE in the UAE, doesn't have a nexus in the UAE, will will not be required to register for corporate tax. And then we have seen there are some exemptions given in the law for exempt companies who are not required to register for corporate tax. Yeah, but so these are the exceptions, and this is kind of a summary of what we have already discussed. So first of all, Article 51 talks about tax registration, why we are not following the same trail of going from first article till Article 15, because it's somewhere relevant here when it comes to state source income and nexus. So it's good to discuss it here. So the Article 51 says that if you are a taxable person, you will be required to register for corporate tax in the manner defined by the law. And then the point B says that if you have, if you're kind of a person which comes under paragraph E, F, G, H, I of Article 4 of the law, we have discussed it. It's discussed in my session number 2. If you would go back and listen to it, you will connect it. And it's also linked to FTA decision 7 and 11. And it's actually talking about those exempt persons which are not government entity, government control entity, extractive business or non-extractive business. So they are talking about the pension funds and other businesses who can have an exemption, but they have to apply for exemption. So the law says that, those type of persons who are although exempt might still have to register for corporate tax. Just to summarize it for you and just to make it easier for you to read it, that's what the law says. And then the law says that the authority have the ability to register anybody and from any effective date. And then there is a ministerial decision linked to tax registration, and it says that ministerial decision number 43, and it says that who is not required to register for corporate tax. Okay, so we have seen in our session 2 that a government entity, government control entity, extractive business, or a non-extractive natural resource business who are directly exempt by the law. So they don't have to apply and take any exemptions from the tax authority. They are directly exempt if they are only doing this business, and we have seen those conditions. Yeah. So these 4 are not required to register for corporate tax, but there is a 5th item here, which is important, and which is why I have put this slide here. The ministerial decision says that a non-resident that derives only state source income and does not have a PE, and I would add up here, and does not have a nexus, will not be required to register for corporate tax. So this is where it is conclusive that, okay, if you only have a state source income, so what could be an example here? That, for example, if you yourself as a human being or a natural person, a non-resident for UAE regulatory perspective, and you take a property in the UAE and rent it. So you kind of create a nexus in the UAE, yeah? But when we read the ministerial cabinet decision about the nexus, we saw that the requirements of nexus only apply to a juridical person and not to a natural person. So you only earn a state source income and you don't have a nexus. Okay, so in that case, you will not have to register for corporate tax if you are a natural person and you're just having a state source income. I'll be open to any questions if we have. So, and in the time being, I can, together further explain here that one more thing. Sorry, give me a moment.
Still, there is no question in the box. Guys, you can send your question in the mentioned link, or you can ask directly.
Yeah, you can even ask here. So just to add up here that, so only if the exceptions to the corporate tax registration law applies if you're following all the conditions. So if you're a government entity and you're not doing any other business, so that is an exception. Even in the same ministerial decision, it's further explained that only if you're meeting the conditions, you will be exempt from corporate tax registration. But if you exceed the conditions and you start earning business and business from business and business activity other than mandated to you as a business of, let's say, for example, extractive business or a government control entity business, then you will be obliged to register for corporate tax. And I'll be open to any questions if we have now.
Do you have any question? Please feel free to share. Yeah, Sheikh Noman, go on.
Okay, I just want to confirm my understanding as per your session that non-resident person is not taxable in UAE, but if he has the PE, Nexus or state source income, he is taxable.
Yes, true. So yes,
So
yes. So
my question is,
hmm.
if a non-resident person is taxable for these conditions, he might not be prone to double taxation for his resident state and for here in as per non-resident. He will
So
also pay tax in his resident state.
that's true, Numan, and we're gonna touch base upon the double tax treaty implications and foreign tax credits when we come to taxable income calculation. But to just give you the answer, so for example, if you are a non-resident and if you have APE in the UAE, okay, so being a resident of, for example, Saudi, okay, so you will be taxed for your worldwide income in Saudi. Let's say your worldwide net profit is 100,000 and your PE profit is 40,000. Okay. So, of course, you would be paying your tax on your full net profit in Saudi. Okay. It's a very broad level example. But yes, you will have to register here as a PE and you will have to pay corporate tax here on your PE related income. Now, your question is that you are paying double tax on a certain amount of your income. So, that's true. So that's where the double tax treaty implications and foreign tax credit implications come in. So, for example, if you have a double tax treaty with another country, I mean to say UAE and another country, so you might not have to pay any tax here in the UAE. Or if you don't have a double tax treaty, then there could be a scenario that you get a foreign tax credit in your main jurisdictions for any other taxes that you have paid in any other jurisdictions. And that's where you will get away with, you will save some of your tax, but you will not be, you will never be 100% proof of double tax. There will still be some percentage of tax which you might be double paying in spite of getting a deduction of foreign tax credit. And just that what happens practically is that it becomes a business cost eventually, but you do evaluate that what could be the foreign tax credit that you can get to deduct from your main tax return, which could be in Saudi in our example. But it might not be the right full amount of the amount of tax which you have paid in UAE, but you will at least get some deduction.
Okay, thank you so
Excuse
much.
me, one question. Can you please just elaborate a judicial person? Although it has been initially in some, it is mentioned, but can you just define what is the definition of judicial person?
So the juridical person is any person which is a legal person in the UAE, or it's a foreign legal person which is effectively managed and controlled in the UAE. That is a juridical person for the UAE corporate tax perspective. But if you want, I can give you a specific reference of the law which you can relate to if in the next session. But that's the juridical person definition. So, for example, when we talk about the nexus, where the decision talks about juridical person, so it just means that any natural person will not have a nexus implication. That's all. So any legal person will have an nexus implication, but a non-legal person will not have a nexus implication from the nexus perspective only.
But what does that mean by non-legal person?
Natural person. From a nexus perspective only, which we have discussed today, a natural person will not create a nexus. So there is
Okay.
no scenario where a natural person would create a nexus.
So
A natural person will
person
only create a
would
state
not
source
be,
income.
so it means that natural person would not be a legal person. It means that only the corporates or
Yeah,
other
it will
non.
not be a juridical person. So yes, so for example, a natural person is earning an income from an immobile property. So it doesn't mean that the natural person will not be taxed in the UAE. The natural person will be taxed, but it will be falling under the state source income category and not the nexus category. That's the only difference which is being created here. And the background is that the law doesn't want it to be overcomplicated for natural persons to not invest in the UAE. So there will be eventually a concept of withholding tax, which is 0% right now, which you would have seen, or many of you would have seen in other countries. Yeah. So if you are a non-resident person and you earn a income from an immobile property, you don't fall under nexus because you're not juridical person, but you're earning a state source income. So if later on we have withholding tax implications, the person who is actually paying rent to you, for example, who is resident in the UAE, let's say if I am paying rent to you, then I might have to withhold rent from a percentage of rent from you as a withholding tax. And that's how a non-resident eventually is going to pay tax in the UAE. For now, because withholding tax is 0%, so if a natural person earns a state source income, it will not have any tax which they have to pay in the UAE. And I guess we will conclude our session for today here.
Yeah, thank you, Sabah. Thank you everyone for joining. So see you in the next episode. Take care till then. Ramadan Mubarak.